$1.2 trillion in a single quarter. The M&A market is officially back.
Transaction volume dropped 17%, Nate. This isn't a recovery. It's a mirage built on mega deals.
Oh, come on. Leonard Green cashing out of Jetro Restaurant Depot for $29 billion is not a mirage. That is a masterpiece. Think of how much wholesale bulk mayonnaise that buys.
It's an outlier. Strip out Jetro and the AI funding rounds, and the market is actually showing stress fractures. But fine, let's talk about the mayonnaise. The rundown.
I am still trying to wrap my head around the paradox of this quarter. Deal volumes are actually down 17% year over year. The bankers are genuinely bored. But the total deal value?
$1.2 trillion, a record first quarter. But if you look at the actual data, it is entirely carried by mega deals and AI funding rounds pretending to be M&A.
Which brings us to the $29 billion elephant in the room, Jetro Restaurant Depot. Leonard Green and Partners cashing out in a massive way.
That single deal is doing so much heavy lifting for the private equity numbers this quarter. It completely masks the stress fractures we are seeing elsewhere. Geopolitics, supply chain stuff. Firms are just writing giant checks to ignore the macro environment.
Speaking of giant checks and ignoring reality, Intel is dropping $14.2 billion to buy back a 49% stake in its Ireland fab joint venture.
I hate this move. I absolutely hate it. They are bleeding cash. Their foundry model is a total mess right now, and they are spending $14 billion to buy back a factory they already operate.
Oh, come on. It is a necessary defensive play. They need total control over their European manufacturing footprint if they want to court the big chip designers. It is expensive, sure, but it is highly strategic.
Strategic is just a word bankers use when the math looks terrible. Did you read the financing terms? It is defensive, but only because they backed themselves into a corner last year.
Okay, fair. Let me offer you a much sweeter deal, literally. KKR is buying Nothing Bundt Cakes from Roark Capital for $2 billion.
Wait, really? $2 billion for cupcakes?
They are Bundt Cakes, Maya. Respect the brand. But yes, $2 billion. Roark is flipping it, and KKR clearly thinks there is massive franchise expansion potential. I just want to see the pitch deck. I really hope it was frosted.
I am sure the management fee is delicious. What else are you hearing?
The rumor mill is on fire right now about Estee Lauder and Puig. Whispers of a massive tie-up, mostly stock.
That would completely reshape the beauty sector. Though I wonder if regulators even care about perfume monopolies anymore, considering where their actual focus is right now.
You mean the massive AI equity investments?
Exactly. The FTC is finally waking up to how big tech is restructuring these AI deals to avoid antitrust reviews, and it is going to change how every deal gets structured from here on out. Let me pull up the filings. The big one, offentent. $1.2 trillion.
Record-breaking. Just an absolute monster first quarter.
Sure, if you only look at the headline number, but transaction volume actually dropped 17% year over year.
You always do this.
Do what? Read the actual reports?
You ignore the absolute flex of a $29 billion deal because you found a sad statistic on page 4. We need to talk about Jetro Restaurant Depot.
Leonard Green and Partners just casually making up a massive chunk of Q1 private equity sales off bulk mayonnaise and walk-in freezers.
It's the ultimate unsexy business. You walk in there, you need a heavy winter coat for the meat section, you dodge a forklift, and you walk out with a 50-pound bag of onions, and that exact experience is worth $29 billion.
I'm actually obsessed with the valuation here. Everyone is panicking about AI disruption and geopolitical stress fracturing the market. And what anchors the quarter? A cash and carry restaurant supplier.
Because it's pure cash flow. This is exactly what I mean when I say financing conditions are improving. PE firms are looking at these massive, stable cash generators and realizing they can lever them up again. It's a very healthy market signal.
I completely disagree. I think it's a terrible market signal.
Oh, come on. How is a $29 billion exit terrible?
Because it proves the middle market is totally frozen. You have a 17% drop in deal volume. The only things getting done are either massive AI equity investments that warp reality or giant mega deals where top-tier sponsors trade blue-chip assets. Everything else is stuck.
You think Leonard Green is just trading this because nobody can buy a mid-cap software company right now?
I think they saw a window where giant buyers actually have financing, and they took it. It's a brilliant move for them, don't get me wrong. But one $29 billion restaurant supplier doesn't mean the M&A market is healthy. It means one asset is healthy.
Private equity just has the munchies this quarter. Look at KKR.
The cake deal.
$2 billion for Nothing Bundt Cakes from Roark Capital. $2 billion for Bundt Cakes.
To be fair, the cream cheese frosting is a highly defensible moat.
Spoken like a true analyst. But seriously, between wholesale groceries and Bundt Cakes, the PE playbook right now is just comfort food. They're taking comfort food private to unlock value.
While tech is out there having an existential crisis, Intel is quietly buying back a 49% stake in its Ireland fab for $14.2 billion.
Which is just a wild capital structure cleanup. Former banker Nate loves to see it, but it's a headache to model.
Right. So you have tech spending $14 billion to clean up its own messes, and PE buying bakeries and bulk ketchup.
And then there's the beauty sector, which might be cooking up something even bigger than a walk-in freezer.
The Puig and Estee Lauder rumors.
Oh yes, I want to talk about what an all-stock beauty mega merger actually looks like. Voices. I'm looking at this analyst note from this morning, and it's just wild. They're pointing out that global deal values hit a record $1.2 trillion in the first quarter. Trillion with a T.
Keep reading the sentence, Nate. You skipped the important part.
Okay, yes, transaction volumes dropped 17% year over year, but 1.2 trillion is a massive number.
It's a top-heavy number. It's an illusion. You have a 17% drop in actual activity, but the total value looks great because of a few mega deals and massive AI fundraising rounds masking the reality underneath.
Illusion is a strong word. The industry watchers are right on their second point here. PE firms are aggressively taking public companies private. They're capitalizing on the fact that financing conditions are actually improving.
I completely disagree. The market is full of stress fractures right now. Geopolitical tension is stalling mid-market deals. The only reason first quarter PE sales look decent is because Leonard Green sold Jetro Restaurant Depot for $29 billion. That single mega deal is carrying the quarter.
You're ignoring the middle market entirely. PE is doing work there.
Am I? Look at the KKR headline from today. $2 billion for Nothing Bundt Cakes.
Wait, really?
Yep. Roark Capital is selling Nothing Bundt Cakes to KKR for $2 billion.
$2 billion for frosting. That's incredible. I actually respect that. Do you know what the margins must be on those tiny little cakes?
High enough to justify a $2 billion check, apparently. But my point is, that's not some grand strategy to unlock public market value. That's just PE firms trading pastries.
Fine, but you can't ignore the real strategic shifts happening. Intel is dropping $14.2 billion to buy back a 49% stake in its Ireland fab.
I'll give you the Intel deal. That's actual painful restructuring, not just frosting.
Speaking of strategic shifts, my phone has been blowing up all morning about Estee Lauder.
Let me guess, the Puig rumors.
Advanced talks for a massive stock-based tie-up. If they actually pull this off, the beauty sector is going to look completely different by next week. Spill the tea. I'm just trying to picture the boardroom dynamics if Estee Lauder actually pulls off this Puig deal. It's like old money New York trying to buy its way into a trendy European nightclub.
The cultural clash is hilarious, but look at the rumored structure. A predominantly stock-based tie-up? Estee Lauder's stock has been getting absolutely hammered for 2 years. Puig is really going to take paper for this.
See, I think they do. Puig gets massive global distribution, and Estee gets the cool factor they desperately need right now. It's a legacy saving move.
Legacy saving? It's a desperation play. You don't use your battered equity as currency unless your cash flow is screaming at you. I need to see the exchange ratio before I buy this narrative.
Oh, come on. You're looking at this like a credit analyst. It's the beauty industry. It's about vibes and market share.
Vibes don't pay the dividend, Nate.
Spoken like a true journalist who never had to pitch a synergy deck. But fine, let's talk about a deal where the cash is actually real. What is going on with Gilead?
Right, the Arcolex deal. They just extended the tender offer expiration date again. Keeps everyone on their toes.
Which is banker code for somebody dragged their feet on the paperwork or somebody is having second thoughts.
Or the FTC sneezed in their general direction. Extending a tender offer is usually just regulatory housekeeping, not a deal breaker.
Tell that to the arbitrage desks. They're popping antacids right now.
Speaking of things keeping lawyers up at night, we need to talk about what's hitting the NASDAQ tomorrow.
Oh, the Revil and RTB digital merger? Ticker RTB?
Exactly. Plus, Washington is finally waking up to these massive AI equity investments. Regulators are circling, and we're going to break down exactly whose deals are in the crosshairs right after this. Tomorrow's radar.
I'm aggressively refreshing the NASDAQ pending list for tomorrow morning. Rival and RTB Digital are supposed to finally start trading under the ticker RTB.
Assuming the listing actually clears. I read the S4 filing, and it's a structural mess. I give it 50-50 odds they delay again.
Oh, come on. They're highly motivated to push this through before regulators start crawling all over these AI equity deals.
The regulators are already crawling, Nate. They're treating these massive AI partnerships as shadow M&A right now. It's not a future problem. The scrutiny is here.
Fine, but you know what deal has zero regulatory risk? KKR buying Nothing Bundt Cakes for $2 billion. $2 billion.
I genuinely thought that headline was a typo. $2 billion for mini cakes.
I'd pay $2 billion for the red velvet alone. Incredible synergy.
Spoken like a true banker justifying a premium. Watch for the Estee Lauder and Puig merger docs tomorrow too. If the gossip is true, I need to see the exact stock ratios on that tie-up.
I'll be up at dawn checking the filings. Catch you tomorrow.